Good weekend, all. Ira Epstein with your metal market wrap-up, and this is your weekend edition, so we'll look at weekly charts, and this is for Friday, the 22nd of August. Now, the Fed made a shift again, and I cover it in my financial market update and in the spider, so I'm not going to cover all the details here. I'd rather just talk to you about it. What the Fed has decided is they've joined with me, and I have said out there and said that don't buy this argument on inflation. It's right here and it's taken care of. I said it's going to creep and keep going for a while. And guess what the Fed chair said? They now think they have a handle on it, and they expect it to creep and go on for a while. May not even drop much in 2026. It depends how it gets through the supply chain. But they are now turning their attention to the bad data they had on jobs and saying that they want to be proactive and help the jobs market. They've lost immigrants coming into the country. They've got to get people and keep them steady in their jobs. The businesses have to be helped in order to do that. So the Fed made the statement, the chair, they're basically ready to cut rates. They need the data to not stop them, but they're willing to live with higher inflation data. So they already said, and the PCE Fed chair said it's going to be 2.9%. They've done their calculation where they think it is. Comes out next week, by the way. So it's got to be the CPI, PPI, and the jobs report to not have big shocks. They can be against the grain, but that won't stop the Fed from cutting. If they're too much against the grain, it's a question of when the cuts happen. Got it? They're going to let inflation run, and they want to protect jobs. Really, that's what I'm seeing in the marketplace. Now, you took off in the stock indices today. Once the speech, what they do is, as the Fed chair's taken the podium, all the notes are then released to the press, and they hit it. The algorithms read it, and the traders, I'm watching it just before he's talking, and I'm going, oh boy, it's bullish. And away you went in these markets. As you know, I've been a bull on gold because I'm arguing inflation is here. It's not coming, it's here. And it's stronger than the wage growth inflation. And the market, I think, will react over time to that. And I look for gold to make new highs. I couldn't be clearer on that. Silver is still stronger than gold on the gold-silver ratio. So in dollars, we're up about, on a full contract, $3,690, and you were up nearly $5,000 in the silver. You've got to do your ratios, though. In the copper market, you had a gain there in platinum. The dollar got hit. It didn't break the key numbers yet. We're going to see if it can do that. And you rallied dramatically in the euro, up 117 points rather. And that's one heck of a rally there. And all the other currencies rallied against the dollar today. Will we get a correction to some of that on Monday is the big thing. Actually, it's Sunday night. You could. You'll get people that are caught. They'll get some buying out of their positions. Then the question is, did the market do too much too soon? That doesn't mean that the groundwork hasn't been laid. I think the Fed laid the groundwork today for what the Fed's posture is going to be the rest of the year. We will get the dot plot, as you know, in mid-September when we get the next meeting. But the market, that'll just be the gravy, if you will. Today was the meal. Now we'll get the gravy parts. In gold, does that look bearish? That's an area close of charts on a monthly basis. If it were to close here, it's a new high. You haven't come out of this congestion area on the weekly chart. That's very important, and I want you to pay attention to that. The market has set up higher lows and higher highs. That's the bullish part now of the market. The market is holding the 18-week average. That's where I think the pros are buying the market. And the resistance is probably around the 34.53 area, which from here is about $70 higher or so, $80. And that's where I think the market's next stopping spot on the upside is. Now, I want to change my thinking if you take out this week's low. Why should the market go back under this week's low? I don't see any reason. I think the market should hold that low. In terms of momentum, the market has worked off. It's no longer got 70 readings. So it's not in overbought territory. As I see it, I see the area I believe the market should hold, and that's a possible resistance point. In the gold-silver ratio, everything that the Fed did today is built into the market, and it continues to move to the downside. When we look at silver, maybe it can get up into the 40-60 area, the upper Bollinger Band. And it too, I would look at silver as if today's lows are taken out, then you've taken out all that bullish enthusiasm from what the Fed action by Powell means. That's how I'm going to view it. You have no business going back under those lows. In the copper market, I think it's got a lot more work to do on this chart. A lot more. You're in a downtrend, you're oversold, and that's all I can say about it. In the platinum market, you never did make it back to the 18-day average, and here too, you have no business getting under the lows now of this week. And so on a weekly chart, I think the metals, the importance is not to break the lows in the platinum, the gold, and the silver. Copper's not doing anything yet. In the dollar, you'd have to get back under this 9,600 level, and that creates a big problem for the market. Then you're opening the door for the potential of going back to the 90 level. So it'll be interesting. The support's around 96.33. To get more information on what we do and how we do it, you see the icons up here? Just give them a click. They'll take you to the free offer section, but more important, you'll be on our website. Sign up for my morning research. Sign up for the full research when I really write in detail. All my clients got that today, of what the Fed did, my take on it. It's all was in their hands before noon or right around the noon time. But they had the text message of the speech at 3 minutes, 5 minutes after he began talking in their hands. I mean, that's what we give. So if you're interested in trading and want somebody that cares and delivers the info to you, that's what we do. Give it a click up here. I'm Ira. I'll see you come Monday or in the other videos tonight. Have a great weekend.